Well, hi traders, I wasn't going to do this update, but I decided I'll do it. But let's have a look at dollar index, and we're just holding above support, which is the 20-day moving average right there. We're below this red line at 104.35, which I'd like us to hold above on this occasion. Yesterday we broke beneath it. We've still got this support level beneath us. Have a look at the numbers on your video and slow it down if you need to. But we're above the 20-day moving average. Support down here also coincides with the 50-day moving average. I still think that we've got some upside on dollar index up into perhaps the 107, 107.50 level. We'll have to see what happens. Have a look at previous videos to see more detail on this. If we do move up on the dollar index right now, we should move down on the euro and the pound. At the moment, I'm short euro, and I'm looking for a move down into 103.50, perhaps even lower, who knows, but 103.50, we're going to start with 105, which is where the 100-day moving average is and the 38% fib, and then 103.50, the 200-day moving average and the 50% fib. So far, so good. A little bit later on today, Jerome Powell is giving his testimony, and I think he's going to be a little hawkish. We've got problems with a buoyant economy. We've got problems with inflation not going down as quickly as we thought it might, and we've also got a very strong jobs market, all of those contributing towards a problem for the Federal Reserve. So I think he's going to be hawkish today, and I think we're going to see stronger than expected jobs on Friday as well. Pound's going to follow suit. Pound's looking pretty good, actually. We've got this downward triangle descending wedge pattern, and every time we hit that top trend line we reject off it sharply. We've just got to break down through this flat bottom here. We should see the pound moving down quite nicely down to the first fib and the second fib. That's the 38, the 50% fib. That would take us down to 1.1640 and then 1.14 on the pound. And it all depends on what Jerome has to say a little bit later on today and tomorrow, and also what the jobs number looks like. So that's all going to play a very important role in how the pound and the euro react. I'm not going to talk about the others against the CAD, but we're short euro CAD, just for FYI. So in dollar yen, we've broken down through the bottom of this rising channel. First step. We've been shorting this for months and months and months. Every time it works out beautifully. We failed to reach the channel top. We failed to reach the 200-day moving average. We failed at the 20 and 100-day moving average. We've broken down below the 50 and the channel bottom. Next stop is the bottom of this move. But first of all, we'll probably get to the top side of this downward trend line, which is around about 88 to 89. And then failing that, eventually we should get down to about 86, 87. And then eventually, in time to come, we should get down to this top here, this plateau top at about 86 to 85. So all looking good for that Australian dollar yen trade. We're short that one too, and holding on. We've already taken some profit on that move down today. And then let's have a look at gold and silver. Well, I'm short on both gold. Well, I'm short on gold physically, not physically. I'm short in the gold trade. I'm looking to short silver. Gold, I don't think we're going to have much problem holding beneath this purple line. We haven't quite got there yet, but we have reached the first Fibonacci retracement level and first form of resistance. This pink line or zone going back some time is the overall defense zone for short positions, and I think as long as we hold beneath there, we'll be okay on gold. We've got to move down through there. We could get a test first of all of 1,860 or 70, but so far it's looking weak and it's moving down. We've got to get through this 20-day moving average and then down to some of these fib levels. My first target, 1,780, and then perhaps a little bit lower, but at that stage I'll be looking to exit shorts and consider buying gold for a longer term move up. Same with silver. I don't think we're going to get up to the area that I'm looking to sell into, which is where this purple line is at around about 2180 to 22, the first Fibonacci retracement, and that purple line drawn across is a natural area of support and resistance. You can see how powerful it's been in the past as support and as resistance. And we haven't quite got there yet. Whether we'll get there or not, I don't know. Again, a lot depends on the dollar's strength or weakness, and Jerome Powell and NFP on Friday. So we'll have to see what happens. Ideally, we could get up into maybe 22 for an excellent opportunity to sell silver for a move back down towards the bottom of this range. And that would be around about 18.5, somewhere around there, 18.5 to 19 on silver. And the one that we've been talking about over and over again, we'll go straight to commodities. I'm not going to talk about stocks because we're stuck in the middle of this range on both the NASDAQ and S&P, and it's all going to depend on Jerome Powell today, tomorrow, and then NFP on Friday, and we'll have to decide as those numbers come out for NFP, and depending on the words that Jerome Powell utters, individual words that everyone will be hanging on for dear life, both bears and bulls. Let's have a look at commodities. Now, I've got a range of commodities here, but the one that everyone's interested in, of course, is natural gas. But I've got Bitcoin on here. I don't trade Bitcoin at the moment, but I think Bitcoin's pretty simple. And I've got it on the commodities chart because it's got nowhere else to go. Bitcoin moved down from, we did short it near the top here for a bit of time. It moved down, made a sideways rectangle, moved down again. It's making another rectangle. We're probably going to see Bitcoin break down through here, down to about 20,000, the natural big round number, and also the confidence of the 100 and the 200 period moving averages on the day chart. Let's get straight to natural gas. We've broken down beneath that support level. I've got a couple of videos on natural gas. Go and have a look at yesterday's video. There's a very detailed analysis of my strategy and what I think is going to happen with this. And these are just my estimates, my best guesses. We're right in the middle of the normative range for natural gas, so anything could happen. We could go up or down. We're right in the center right now. But we have broken beneath crucial support at $2.63, and below us we've got $2.33. That's the next crucial support level. We broke down there. We formed this isolated tower candle. Yesterday was pretty bearish, closing beneath the support that we hoped or thought might hold. I've hedged my long position slightly more with a short position, but mostly I'm still long, and I'm willing to exit my short hedge if we get down to $2.33 or 35, and perhaps add some more to the long side. In other words, weight the long side up more heavily than the short side. However, having said that, if this one fails, if 233 fails, we could get down to $2 and perhaps even below. If we break below $2 and hold beneath $2, we're probably going to have to go down to $1.80 on natural gas. So that's my strategy in broad. But if you want a little bit more detail on it, go and have a look at yesterday's video on natural gas. We are holding above the 20-day moving average, which gives some hope for the bullish side. As I said, I'm net bullish, net long on this. So I prefer it to go up, but I'm willing to close my short hedge down here and consider adding more longs and potentially down at $2 again. Failing $2, probably $1.80. So that's natural gas. Brent crude oil, we talked about in brief on Twitter. I think overall we've got a bearish flag on Brent crude, but I don't know enough about OPEC and BRICS and Russia and Ukraine and US oil and supply lines, any of that sort of stuff. It's very, very complicated, and geopolitics and everything comes into it. So I don't really know. So we have to revert to technicals. If we look at purely the technicals on Brent crude, we should reach back up to around about $90, maybe 91, to the top of this bearish flag. And then that's where the 200-day moving average will meet it. And thereafter, I don't know. We might move higher, and this might form a bottoming pattern rather than a flag, or we might touch the top there at around $90, just above $90, and then move lower and retest the bottom of this channel and potentially break lower and continue with the downtrend on Brent crude. I don't know. I'm not trading it, but those are just my thoughts. And then sugar and soya. Well, basically, I'm short sugar and soya. I was short sugar at the top here, took profit at the bottom. It's moved back up to fill that gap and touch the 20-day moving average. So I'm short sugar again, and I'm short soya again. Soya, pretty similar pattern. We were long at the top, took profit down at the bottom here. I waited for it to move back into the zone, touch the underside of this downward trend line, which it broke, and I'm short soya again. If soya fails to hold beneath this area at around about 1550, 1560, then we've got a chance of moving up into the 1600 level and perhaps 1620 into this top zone, which is a far more powerful resistance zone overall. But so far so good. We've got room to move down to about 1400 on soya. And that's the overall strategy. So I hope you found all of that useful. So you've got my view on currencies, on the yen pairs, on gold, didn't talk much about stocks, but we're right in the middle of the range. Depends on Jerome Powell and NFP, of course. And then we've talked about commodities. We've talked about natural gas. Have a great trading day, and I hope you found that useful. If you did find it useful, please like the video and subscribe to the channel, or do whatever you want to do, but it helps us if you subscribe, and I'd really appreciate it. Take care.